Welcome to the Mwango Capital Podcast. At Mwango Capital, we aggregate key information on African capital markets through Twitter, Telegram, and our weekly newsletter called The Baobab. We also hold weekly discussions every Friday on topical issues on African capital markets, and we also engage in analysis and research and training. We look forward to another engaging conversation on our Twitter spaces. So join us there every Friday so that we can keep having quality conversations on African capital markets. Without further ado, welcome to today's conversation.
So welcome to another Twitter space where we try to cover the corporate issues around East Africa. So this is Mwango Capital. I'm the founder, Eric Bokaya. Today we are hosting the CEO of Bank of Kigali. So welcome, Diane. Maybe you can start off by telling us a little bit about yourself and maybe your journey to becoming the CEO of Bank of Kigali.
Thank you, Eric. Thank you for hosting me. It is my very first Twitter space event. So I'm very happy and very curious to interact with people on Twitter. So as you said, my name is Diane Karusisi. I'm the CEO of BK Group, actually double, also as CEO of Bank of Kigali, the bank. BK Group is a holding company that is active in financial services in Rwanda. We're actually the largest financial services company in Rwanda. So traditionally, we are active in banking. I think this is our bread and butter, but we've been expanding over the years into other financial services. We have an insurance company, non-life, general insurance. We have a small investment bank, very innovative, doing fund management, advisory, etc. And we also have another very exciting business, which is the technology business that is supposed to support all these subsidiaries enter the digital era. And they've been having and building some very innovative products. So this is who I am. I've been at the bank for 5.5 years now. A lot of growth, a lot of learning. And yeah, I'm looking forward to interact more with you on this event and also to interact with the many listeners.
That's very interesting that you shared about the bank and especially also how BK Group relates to it in terms of the subsidiaries that you have. So we're going to dig into that deeper a little bit later. But now we'll start with your personal journey. I know you studied in Switzerland and also worked at Credit Suisse. Maybe you can tell us where your career has taken you, highlights of your career so far.
Thank you, Eri. So I actually started off as an academic. After my studies, I did a PhD. I taught statistics at University of Fribourg in Switzerland. It's a small city in central Switzerland that is bilingual, French and German. And then I went on to work for Credit Suisse Asset Management in Zurich. And I was not doing banking as we do here. It was asset management, managing bond portfolios. Quite interesting. I had a very interesting experience because the financial crisis in 2008 found me there. So it was quite crazy times. And then in 2009, August, I moved back to Rwanda to work for the statistics office. It was my first time actually to come and live in Rwanda because as many Rwandans, I was born abroad. I was actually born in DRC and grew up there until I went to Switzerland. So moving back here was quite an experience because I had never lived here. Obviously, I had family and friends, but I had only spent weeks on vacation. So it was quite an experience. So I started to work with a statistics agency, which is charged as any national statistics office to do economic statistics, inflation, GDP, but also social statistics, health, education, etc. So it was a very inspiring experience for me because moving back, never lived in Rwanda. We're preparing a poverty survey and the census when I moved back. So it was an opportunity for me to get to know the country. So I traveled all the 30 districts of the country. It was really getting to know my country and my people. So it was very interesting. I spent 3 years there, and then I got called to work in the president's office. And I think the rationale then was that I had worked in availing very key statistics for planning of the country, and the president wanted me to be sort of a policy advisor. So I went there and I was the head of strategy and policy for another 3 years. But because I had a background in finance, I was always interested in what was happening in the financial sector in Rwanda. So I had served on the board of Banque Populaire, which was the second largest bank at the time. Also served in business development funds on the board. So I did many things in the financial sector because I had a lot of interest there. And then I got opportunity to come to Bank of Kigali as CEO in 2016. And I think at the time, the board wanted, someone who would bring new perspectives and who also, of course, steer the bank to the digital transformation journey. So which was my big task when I joined Bank of Kigali. Very interesting to see how banking is changing and has actually changed in the past couple of years and will continue to change. I always tell my colleagues that our role is to remain relevant in this digital era, and that's what we're doing. So I think I've said a lot about my career and my journey. I don't know if you want to know anything more. I think you can ask more questions.
Yes, I mean, the experience abroad and also the experience that you had across the various positions that you held, which ones prepared you best to be the CEO of Bank of Kigali? And also, I've lived abroad a little and then met various Rwandese people. There is a strong connection they have to the homeland in terms of wanting to go back and contribute to their development back home. Maybe you can share a little bit about what about Rwanda that attracts even those who are Rwandese themselves living abroad and having the strong desire to come back and actually participate in national development like you.
Thank you, Eric, for the question. That's true. I think many Rwandans and even the ones I left abroad feel a very strong connection with the homeland. I think we have a very particular story with the genocide against the Tutsi in 94. And even before that, many of us were born abroad from refugees' parents. And having a home was something like a dream. So eventually, when the country was liberated after the genocide in 1994, people felt that they could finally have a homeland. And beyond that, I think that the government at the time, and the current government, has been all about unity, transformation. And very inspiring, when you look at the growth trajectory and the transformation, it's quite inspiring, I think, for all of us and hopefully for other Africans. So people really feel the connection. They want to contribute because we all believe it's a beautiful journey and beautiful story. Yeah. And many of us want to have kids growing up here and learning to be a Rwandan and an African and contributing to the transformation. That's what I can say. And I can see a number of people who have a similar journey, who were born abroad and who have come back to contribute to the development of the country. So of everything I've done, I think what prepared me, I think it's not only for the job I have currently, but I think for life is the time I spent at the office of the president. I really, learned beyond having a passion for the country. I was very humbled to see people who would think for all Rwandans, look very far at the future of Rwandans and Africa. So this has really inspired me a lot. And of course, working in an office that is looking at the strategy for the country, I think really looking far as opposed to being a short-termist, I think that's what has prepared me for the job I currently have. But also, I learned that it's really all about people, not necessarily the knowledge that you bring to the job, but a lot about the attitude and the passion you put in the job, the curiosity, because you can find people with a lot of knowledge who've even written books, but who remain wanting when it comes to delivering. So I've learned that it's all about people, the passion they have, the attitude, the discipline. Discipline is quite important. I've learned that. And in this country, it's very important to be disciplined. But elsewhere, I think in life, it's very important to be disciplined. And also, I like people who are curious and ambitious. So I think, and my job as a CEO is, I don't do stuff. I get stuff done through people. And it's extremely important to have the right people around you.
The next question I wanted to ask is about the banking landscape in Rwanda. So maybe paint for us a picture of how banking has developed over the years in Rwanda and how BK Group and Bank of Kigali came about. You can give us a quick sketch of a history and also a picture of the banking landscape in terms of market share. How much do you own the assets around? A few figures and statistics would do.
Yeah, I think it's a quite competitive sector I think we have 11 commercial banks, a development bank, and we've seen strong growth over the years. And because of the ease of doing business in the country. We've seen pretty much every year or every 2 years, a new bank setting up shop in Rwanda. So we have typically all the large regional banks from Kenya, KCB, Equity Bank. But we also have the Nigerians, Guarantee Trust Bank. We have Access Bank. We have Eco Bank. From Kenya, I forgot NCBA. We also have all the Continental Bank, Bank of Africa. So it's quite a competitive sector. You cannot sit back and hope to keep your market share. And I would say that there's been a lot of reforms to facilitate business in banking. And the one I like most is the land reforms and the fact that it's very easy for everyone to go to a system, put the unique identifier of a plot of land and know if it is mortgaged, who owns that plot of land, etc. So you have a lot of information and it's very easy to register collateral. So this is a feature of our sector that makes it very easy for us to do business and to become profitable because it also reduces operational costs of doing business. So yeah, it's a very competitive sector. We still command a feasible market share. We have more than 33% market share in assets. Same, I think, across a lot of metrics, deposits, net loans, gross loans, etc. We have a slightly higher market share in terms of equity. So that shows we have a lot of room for growth. What else? We have a large branch network. Not the largest because BPR and now KCB has a large branch network. And we offer all the typical services that you would expect from a bank. Accounts, obviously, we do a lot of lending. Our main business traditionally has been corporate and SME business. But we ventured into retail business in the past years, trying to excel at it. It's not an easy business at all. We are also very active in payments. We are the largest issuer and acquirer here in Rwanda. And yeah, we want to go digital. I think this has been our ambition from the past couple of years. And by the way, we just migrated to a new core banking system this past weekend. It is still a lot of work. It's a project that started 2 years ago, and we are happy to see it through, although we still have a number of teething issues. But we believe we are creating the foundation for becoming truly digital and to be able to provide all the services that we have digitally through digital platforms. So this is who we are. This is our positioning in the market. We see, obviously, the large Kenyan banks as strong competitors. And that's why, of course, we cannot just sleep and expect that nobody will eat our cake. Of course, we really want to provide the best service. Some few years back when we launched our digital transformation strategy, our key aspiration was to give anyone, anywhere, the best customer experience through digital. So this is what we've been trying to do in the past couple of years. So I don't know if I've answered your question or if you have some follow-up questions around that.
Yeah, definitely. I mean, in terms of the banks that come from Kenya, are you thinking of also venturing outside? Have you ventured outside the country? And in terms of value propositions to Rwandese people, what distinguishes you from the banks that are coming from Kenya? What distinguishes you from them? Is it local presence, local knowledge,
So I think it's a lot of local knowledge and context because every country has its specific context. And us understanding the context of this country, the strategy, the vision of this country, I think we are married to the vision of this country. Us also having the right networks. I always like to have branch managers in the provinces, in the districts who are sort of opinion leaders who are known, because I think it's really important to understand what's happening. So I think this is our main differentiator. But what we're also trying to do is to venture outside banking and into other financial services like insurance, advisory, brokerage. We also have a brokerage business, fund management, because we believe financial inclusion is still low, I would say, not probably the lowest in the region. But we only have less than 40% of Rwandans banked. So we believe there's still a lot of business to do here. And even the depth of financial services, insurance penetration very low at below 2%. My belief and my view has been from the beginning that let's expand our business in our backyard because we really understand how to do business here. And eventually, after we've perfected digital technology in financial services, we may think of going outside Rwanda and probably have some niche products and markets. But for now, I think in the medium term, the plan is to continue venturing into new financial services in Rwanda. So we are thinking of life insurance. We are thinking of a leasing company and more. So that has been our strategy. But again, I'm not the only custodian of the strategy. We have a board meeting and we actually have a board retreat next month that will give me and my colleagues a direction for the medium term. So this is what we do. And I'm actually quite passionate about diversifying away from banking, because it's very important even for investors to see that you have broad diversification of your revenues. I think it's quite important for them, and we've been told many times. And that's what we've been doing. Today, the insurance business is already a sizable business when you look at the revenue of the group, and we want it to grow and to become eventually 30, all these other businesses to become 30% or more of the group.
But fascinating that you want to diversify away from banking. I'm curious what makes you not want to be in banking that much. Is it a competition, or do you feel you can provide more value elsewhere? And also, if you can paint to us a picture in terms of revenues from the various companies that make up the BK group, what are the contributions in terms of revenues and costs, and in terms of now and maybe in terms of your goal to see banking become less and less of a contributor to the revenues? How have you positioned the group so that it's ready for that kind of a future?
That's a good question, and that's what keeps me up at night. I think that banking services, transactions, it's going to be more of a commodity because today with your phone, in Kenya with M-Pesa, in Rwanda with mobile money, you can do all the transactions that you want. You can pay, etc. So I really feel for us banks to differentiate ourselves, we need to provide value-added products on top of just the transaction services. People maybe needed cards, but today plastic cards is not as useful for the normal Rwandan as just a phone with a mobile wallet. So my belief is that for me to become relevant to my clients, especially to my business clients, I need to be able to provide advisory. I need to set up that one shop where the client can get banking services, but you need to offer a number of value-added services. If it's a client that has a lot of liquidity, we need to come up with a product to tell him how he can manage that liquidity and make money out of that liquidity. If it's a client who wants to maybe list on the stock market, we need to tell him we are able to help you list on the stock market or issue or raise money through a bond, etc. So I think that's the value because we believe we are partners, life partners to our clients, be it retail or business, and only offering transactional services is not what we want to do. So that's why I really believe it's important for us to offer value beyond just transactions because everyone can offer transactions. Tomorrow, Facebook, PayPal, all these global players, Google, are going to come. They have a lot of data. They have a lot of all the technology. They can offer those kind of services. But if you have that sort of intimate relationship with the client, I think, it will be more difficult for all these big giants to compete with you. So that's my thought process. The other question was the contribution of these other subsidiaries. Of course, it's still quite small. Today, the bank makes about 90% of the revenue of the group. Insurance is number two. It's coming number two, but it's growing fast. They have exponential growth, and it's a small business. When you think about it, it's a baby business. We set it up about 4 years ago, and today it's already the second largest insurance company in the country. So we believe there's a lot of growth potential there. So insurance comes second with about 7% of the revenues of the group. And then we have BK Capital, the investment bank, which is still small, but again, a lot of potential. When you look at the transactions, very inspiring transactions they've had in the past months. They listed the largest telco, they listed the largest cement plants, all these really transactions that are transforming capital markets. And then finally, we have our tech business, which is profitable, yes, but not yet contributing significantly to the revenues of the group. But again, with a lot of potential there. So when I meet with people, I even tell them that at some point, we'll even be able to spin off one of these companies and get many multiples when you look at the balance sheets that they have. So we are quite bullish about growing in the country and diversifying our business in the country. Again, because we really have a passion and an understanding of where this country is going. And maybe you know that Kigali is positioning itself as a hub for financial services. So we believe we have a role to play there as the largest financial services company. And we're exploring what other opportunities we can have. And when you look at the number of incentives offered under this KIFC framework, it's really, telling us that there's a lot of potential we can continue to grow in the country.
Great. You talked about listing. Maybe you want to spin off some of these companies, but back in 2018, you cross-listed on NSE, becoming the only cross-listed company from Rwanda. So I wanted to understand, what was your thinking around the cross-listing, and how has it been, and the lessons and reflections that you've had in terms of that experience of cross-listing? Is it something that you'd recommend other companies to also do?
Yes, absolutely. I think it's been a very good experience so far. And I believe, in East Africa, at some point, we'll have one big market. And yes, so we took the decision of cross-listing. It was a request from many investors. We were meeting many investors telling us that they love our story, they love the stock, they love everything about Rwanda, but the custody links are quite complicated, etc. So they are telling us, you go to Kenya and we'll be happy to invest in PK stock. So then we, of course, engaged the regulators in Kenya, in Rwanda. We found out that the framework was already there, actually. It's not the framework that we put in place. It's a framework that is there to facilitate companies to list on both markets. Both markets are fully fungible. And it has been a very good experience. Obviously, we haven't had very many Kenyan investors in the past couple of years. We would have expected to see more excitement, but I believe this kind of engagement will raise awareness about Rwanda, Bank of Kigali to Kenyan investors, and hopefully we'll see more activity. But even when you look at the activity on our counter in Nairobi, is actually more active at the counter here in Kigali because we don't have much liquidity. We don't have many real institutional and even retail investors here in Rwanda. We have two large investors, which are the Social Security Fund and also the Sovereign Wealth Fund. These are long-term investors and they buy and hold. They don't transact much. So you'll see our counter in Kigali has very little activity. But Kenya has been actually quite surprising in terms of the trades that we see there and the interest. And we've seen also many of our long-term shareholders who have actually moved from the Rwanda counter to Kenya, which I think they are taking advantage of the fact that we are cross-listed. So it's obviously something that I would encourage local companies to do, because Nairobi remains the financial center of the region.
Maybe you could give us a few reflections that you've had in terms of the cross-listing so far. And then a fun fact that I actually learned in the process of preparing for this, Bonnie highlighted it for me, is about the turnover of BK shares actually at the NSE being higher than that at RSE. That's something you've also confirmed. Is that true?
It is true. It is true. We see more interest from investors on the Nairobi counter than we see here. And, it's very simple. Nairobi has very many global investors set up to trade in Nairobi because they have all their custodians in Nairobi. And it's a much more active capital market. And, our stock has performed quite okay despite the crisis. And that's why we've seen some interest from the Nairobi market.
So then in terms of rolling out banking operations in Kenya, since the stock is already there, would you give Kenyans and assurance in the near future that they're going to see Bank of Kigali set up there?
So this is not in our medium-term plan. We believe Kenya is already not overbanked, but there are very many banks already in Kenya. So this is something that we are discussing. And as I said, we have a strategy workshop retreat with the board next month. So I'm going to start reflecting on regional expansion. But my opinion is that we need to look for a niche, not necessarily in banking, but in any financial services where we believe we can have a competitive edge in terms of knowledge, in terms of connections, etc. I think if we are to go in the region, we wouldn't probably come with a fully fledged banking license. Maybe we'll do only wealth management. It's something that we need to think about. because it's difficult to compete with incumbents in Kenya who have roots, networks, etc. I believe unless you bring a very special value proposition, it's difficult to compete. So that's my thoughts. But again, I'm not the only custodian of the strategy. I think I'll get more guidance on this in the next couple of weeks.
Yeah.
So no, the plan is not to set up a bank in Kenya in the near future, but we want to attract Kenyan capital in Rwanda because we believe if many people know now, many investors know the story of Rwanda. I think it's a very inspiring story. A lot of transformation and growth, a lot of potential still. And I believe as the largest bank, we are a good proxy for anyone who would want to invest in Rwanda. Investing in BK is actually taking advantage of the growth story of our country.
Oh, all right. I mean, in terms of growth to Kenya, you don't have to start from scratch. We have a few banks we believe are very highly undervalued, which you can get for almost free, and then they can be a way to scale up operations in Kenya. So if you coming then, you can buy a few.
I don't like.
We like Facebook.
I think when you have something free, it's often not a good thing because you find the things hidden. And in the end, you have more problems than opportunities.
Definitely. So in terms of the three different arms of the group that you run, how do they synergize? Do you see them more as a conglomerate, or do you see them more like a one holding company with several companies that have cross synergies across the group and all? And also for BK Capital, recently SBG Security relinquished their brokerage license to partner with you. So in terms of that partnership, how do you see different arms of developing better partnerships as they go forward? Maybe you can talk a little bit about it.
So we have obviously a lot of synergies because we have already a large network of branches. And we serve mainly business clients. That's why our clients, we always have opportunities to cross-sell and to sell insurance services, to sell any other services, including technology services. So that's why we find it maybe easier because we have the access to the clients. And for these new businesses that we're setting up, client acquisition is not that expensive because they're already part of the family, if I may say so. So that's why it's been, not easy. It's never easy. When you set up a new business, it's never easy. And my colleagues who run these businesses will tell you. But at least we have a portfolio of clients. And if we have a good relationship with them as a bank, they'll find it easier to get all the other financial services from our sister companies and to have all the services in one shop. So our ambition eventually at some point is to be able to serve our clients on digital platforms. So someone who has the BK app will be able to trade on the stock market, to buy treasury bonds, to buy and sell stock, to also renew his license, insurance license, etc. We want to have everything offered on the app because we understand people now want to transact real time, anywhere, at any time. And our ambition is to be able to offer all these services on our platform.
In terms of that strategy, I think that's a really good strategy that you want to create a one-stop shop for any businesses that want to transact with you. So I think one approach that some of the Kenyan banks have taken is that they want to do a lot of M&A activity across the region and to expand rapidly. And as you said, like it's maybe a strategy that you may adopt in future. But when you look across the region, where do you see opportunities in terms of where are the unbanked areas? And if you look across East and Central Africa, if you've explored the region a little bit, and I know you've lived in DRC, so where do you see opportunities, not just for BK Group, but generally across for anyone who wants to set up shop there?
So obviously, I think DRC is a very big market for all companies in Rwanda. And I believe because if I tell you that in Rwanda we have 40% formally banked, I don't know that statistic in DRC, but it's probably less than 10%. So I believe there's a huge potential there. Of course, the hurdle is going to be a regulatory framework, etc. And doing business in DRC must not be as easy as it is in Rwanda and in East Africa in general. But I believe the potential is definitely there. And I'm seeing some Rwandan companies taking advantage of the opportunities there. But the neighborhood, Tanzania is a country with huge opportunities. Uganda, the same. But unlike probably my colleagues, bankers in the region, I don't believe replicating a business model that you have in your home country is the way to go. I really believe that you need to find a niche. Obviously, in Rwanda, we are trying to do everything. But if you are to go in DRC, for instance, or in Burundi or Tanzania, I think would really perfect one service or product and only it's a way of also mitigating the risks, because trying to offer everything in a country that you don't know is probably difficult. Of course, my colleagues tell me that I'm risk averse, but I feel if you're starting a new business in a country and a context that you don't master, you'd rather start small and do something that you have full mastery of. So that's my opinion. And in the region, because we see a lot of transformation, a lot of wealth creation, I believe there'll be opportunity for Rwanda because it's a safe country, the rule of law, transparent, a lot of accountability, and close to zero corruption. I think if we start building businesses around wealth management, we'll be successful. And these are the kind of businesses that we would export in the region, because we see a lot of wealth being created. And we also know that in Africa, people typically would want to save their money abroad, but with the compliance hurdles nowadays, it's more and more difficult for Africans to save or invest elsewhere. So I think it's something that where I see an opportunity. And if I was to decide, I think I would go there.
All right. I want to pick up a few questions that we've seen across the Twitter spaces. There's someone called Emmy who's asking how you deal with defaulters and what measures you've taken in terms of reducing the NPL. Maybe to ask a broader questions, how is COVID affecting banking in Rwanda and in terms of the non-performing loans that you are seeing, the growth over that period of time?
A good one at the height of the crisis. This was second quarter of last year. Things were really bad. I remember we had 40% of our book, our portfolio, restructured, and we had given a moratorium to 40% of our clients because they couldn't simply service their facilities. So as we speak, this number has gone from 40% to less than 4%, which shows that business is picking up progressively. And that 4% is in the hospitality sector, because this is a sector that hasn't fully recovered yet. Clearly, because Rwanda used to be a top destination for events. Events are happening, but not as many and with as many visitors as we used to have. So that's why all our clients in that sector are still struggling to meet their installments. But overall, I think COVID has had massive impacts on the economy, putting a lot of people out of a job. Many businesses had stopped. And even today, we have a number of restrictions around curfews, etc. So business has not fully recovered, but we believe with the very effective vaccination program that the government has put in place. I think yesterday I checked, we had more than 3.5 million people with at least one dose, which shows that we are really going towards 50% before the end of the year of the adult population. So things are improving. And I'm crossing my fingers that we can have a happy Christmas, all of us, without a mask, if possible. But yeah, COVID has affected the economy. The government set up a number of programs to support these businesses that are struggling, hotels, but also other businesses through what they called an economic recovery fund. We were, of course, one of the biggest participants, and we would borrow from the government to on lend to our clients at the subsidized rates. So this has supported many clients to survive the crisis. And we are hoping that in 2-3 months, we'll be able to say that COVID is behind us. So how do we treat defaulters? We don't like defaulters, obviously. So it's not the right time for us to start auctioning because there's no market simply for these assets. But we try to micromanage them, and we try to make sure we get as much value as possible from the business. And we advise them, because normally when someone has invested, nobody wants to lose the business and to lose the assets. But sometimes they lack discipline. They start diverting their revenues to open other businesses, or they want to expand too fast. And this is where the problem comes. And I think with my colleagues, we always say we need to advise these people, even the people who are very successful today. We need to advise them and tell them to keep the discipline, because things can change. And now people know that in economy, you have business cycles. In the past year or so, people would never think that Rwanda could go in a recession, because we had steady growth for more than 10 years, 8% on average. All the statistics were extremely impressive. So people would not think that they need to save, they need to be prudent. But now I think it's going to be very easy for us when we engage our clients, to remind them to be disciplined and to be prudent, because they understand now that, business cycles are real.
Great. Another question is, because you say you have a fintech technology kind of what's your thoughts around fintech and the threat they put out to banks in general, traditional banks, and how are you addressing that for yourself? And are you intending at some point to have a capital venture which can also invest in some of these fintechs that threaten to disrupt the business of the traditional banks?
Yeah, I think fintech is very exciting. You look at these people who are coming to disrupt us, and they actually show you where your issues are, where the pain points of your clients are. And the great thing about it is that it has sort of showed all banks that we are not here to stay. If we don't do the right thing, we risk to disappear or to become irrelevant. But I believe because of the regulatory framework we operate under, which is sometimes quite constraining, I think it's good to have businesses that are smaller, more agile, to specialize on one particular aspect and to provide financial services that would be probably more difficult for a big bank to provide. And we are seeing that already in payments. Today, we have more fintech in payments, digitizing payments, offering a lot of data that all of us can consume, and making payments real-time, seamless. So this is a great thing. I think the economy, needed that, especially during the COVID crisis. People needed to be able to pay digitally, quickly, seamlessly, and affordably. So I believe there's a role for fintech. There's a place for fintech. But I believe this does not raise the place of bank. I think we can coexist, because even a fintech will need a back-end integration with a bank, just because the money has to go somewhere, has to sit somewhere. So we still have a role to play as banks. And what we're trying to do with our fintech is the role of Big K Tech House is to create digital consumers for the bank, but also for the other subsidiaries in the group. So they're in the business of developing platforms for farmers, for agriculture, for education. And they have one platforms that they've developed where they were able to register more than 2 million farmers. These are almost all the farmers in this country. And this is typically a sector that is unbanked or underbanked. And now we are working with them to see how we can provide financial services to farmers. Because I believe agriculture is clearly the next frontier for banks, for commercial banks on the continent, because it's a big part of the economy that is largely unfunded. So this is what they do. We want to be disrupted from within, and we work collaboratively with them. We tell them this is a sector where we believe there's opportunity. Can you help us to create the data, the framework, and then we can come with tailor-made financial services. And this is what we're doing. So it's quite exciting, actually. What they're doing is quite exciting and is attracting a lot of attention from people beyond Rwanda. And although they're not making a lot of money yet, so we believe the potential to make money through monetizing the data, because they have massive data that would be interesting for any business and even for the government. When we are able to monetize the data they have, I think I will be able to make a lot of money.
There's a question that has come through about the dividend paying strategy. If I remember correctly, you paid dividends this past year, and most banks, because of liquidity, said they wouldn't be paying. So I wanted to understand, what's your thinking around paying out dividends, and that means a capital allocation in terms of capex, in terms of investing back in the bank, in terms of paying back to shareholders, and also maybe have you thought about share buybacks to boost the share prices, like some companies in Kenya have been doing? And so maybe you can give us a picture about your bank's thinking around capital allocations and dividend payment.
So actually, we did not pay any dividend. We declared a dividend for 2019, but because of COVID, the regulator actually restricted all dividend payments for the year 2019. So we are still keeping that as a payable in our books. We haven't paid to shareholders yet. We are waiting for the regulator to give us a go-ahead. For 2020, we did not pay at all any dividend. And that's why many of our investors and shareholders are not very happy, because despite the performance, the strong performance during the crisis, we're not able to pay back some money to shareholders. And I believe it's a good policy not to distribute everything, because you want the company to keep growing organically without going back to shareholders and to the markets to raise new equity. But I believe, especially for a stock like BK that is not very liquid and that have not appreciated a lot in the past years, it's absolutely important for shareholders to get some cash out of their investments. And that's why we keep, pushing the regulators to see if they can allow us to pay dividends. So traditionally, our payout ratio has been between 30 and 40%, sometimes 50%, depending on the performance of the year, which we believe is the right thing to do. So we are able to re-inject the other part into the business to be able to grow organically. Actually, in 2018, we did a capital raise through a secondary offer. It's not an easy thing to do. I would not want to do it again. I think I speak for my colleague, my CFO. I don't know if she's here, but touring the world, telling people about Rwanda, about Bank of Kigali, and people having sometimes some very funny perceptions about Africa, about Rwanda, and even being surprised that you are a woman CFO or a woman CEO. It was not fun. So I'm really hoping that I won't have to do it again, and we can continue to grow organically. And I think we even give more value to our existing shareholders, and we don't need to go back to the market and eventually dilute them. That's my opinion on dividend payments. I believe it's important, especially for a stock like ours that is not very liquid.
I'm sure the shareholders are rejoicing when they hear that there's someone at the helm who really thinks about their dividend. I know there are several institutions, at least in Kenya, who withheld dividends during the past year. Because of that, the investors have been very much disappointed, and that has shown up in the share price. So maybe a quick question that has come through is, do you own shares in the company and in the bank itself, in the sense of yourself buying them? I mean, how much skin in the game do you have in terms of owning shares, Bank of Kigali yourself?
Yes, obviously, I'm actually a big shareholder in the business, because I believe in this business. I believe in the growth potential. And above all, I believe in the story of Rwanda and the transformation of the country. So I believe BK, the group, is poised for growth and for performance in the future years. So there's a policy in BK for share ownership for senior members of the staff community. So we progressively buy stock. During the secondary, the right issue, we also bought shares, many of us, senior members of the staff community. So we have a lot of skin in the game. And sometimes when we are fighting with regulators and telling them that we need them to relax the restrictions around dividend payment, they think we are doing that because we are shareholders ourselves and we also want to get a dividend, which is right to a certain extent, but we believe it's just important, especially for a stock like BK that is not very liquid. That is, in my view, I believe also undervalued. When you look at our current price, we are trading below book value. The multiple is ridiculous. So we believe it's a good thing to give shareholders some cash and to give them some liquidity out of the stock. Otherwise, some of them will just be disappointed. They keep waiting, and if there's no liquidity, if the price is not appreciating, then eventually just dump your shares, which becomes even more difficult for you. So that's why I think I am a strong believer in paying out decent dividends on an annual basis.
Great. So a couple of questions which have come in. One is, how did you manage to win market share on the former market leader, I think, which is BPR?
It's difficult for me to say because even before I joined, we were already the market leader. But I believe if you know the story of the bank, we listed in 2011. And at the time, I think the rationale for listing was building a branch network. So, which we did aggressively. And I think we're also just doing a better job, providing better services than the competition, even in the region, in the provinces. And we ended up getting a better business. And I think now for us, the rationale is not to build more branches because we're actually closing down some branches. We've reduced our branch network, not significantly, but we've closed some redundant branches in Kigali mainly. Now, when we went back to the market in 2018 with the right issue, the story was we are going digital. So we wanted to invest in our digital infrastructure, which we're doing. And we believe that we are able to gain even more market share with the current strategy because it's becoming easier, cheaper to win over a customer because we just need someone who has a phone and an internet connection, and you can get this client and offer your services. So this is what we're doing. And, in the end, the service sector is about people. So if you have the right people providing the right level of service, treating your customers right, I think there's no secret. If you do this better than others, you'll get a better business and you'll grow faster.
All right. There's something about APIs. Does your bank have APIs, and when are you opening them to startups?
Obviously, I think API is the business of the future. You need to have an API framework and be able to integrate with any third party quickly. So today we are working with a number of fintech here for them to provide services through our API integration. And if this has worked, we actually had a crisis yesterday because one third-party payment provider was not able to get services paid through their platform because the API was down. But we've been able to restore it early this morning. This was a result of the recent migration we did and the issues we still have around stabilizing the systems. So yeah, we have an API business, and I believe this is the next frontier for banking business. We have now an integration with Alipay. We want people to be able to send money to China instantly and at very affordable costs, because today we still use a traditional Swiss platform for people to send money abroad. But with these integrations, we'll be able to get people to send money instantly from their phones, and of course at very affordable prices. So yeah, we have the API framework. I'm not the best place to explain how it works, but obviously it is open for us to interact and connect with third parties to offer our clients services from the third parties, but also to offer third parties payment business to their clients. So this is how it works.
The next question is about crypto. How open are you to having crypto on your balance sheet?
It is a good one. I'm actually not a big believer in crypto. I'm just a very boring and old-fashioned economist. I believe you don't just create a currency. It has to be backed by something tangible, by some value, or at least by a government that is trustworthy. So this is my belief. And when you look at the recent trends in all the crypto, including Bitcoin, I think it's just that it's a demand and supply that is playing. You have a high demand of something that, in my view, has little value. And obviously, I call it inflation. I think economists call it inflation. So that's my view. I know it's very old-fashioned and not very interesting for most young people, but I just feel it's a bubble that is going to come down at some point, to explode at some point.
Another question is about, have you explored products around Islamic finance and Islamic banking?
To be honest, no. It's something that may be interesting, but we haven't thought around Islamic banking because we don't see yet the opportunities in this market. But eventually, if at some point we believe we want to expand beyond Rwanda, it is probably going to be something important for us. But for now, we are not considering Islamic banking.
A couple more questions that are coming in. One question is, could you give us a picture in terms of the investment landscape in Rwanda? Which are the hot sectors? How is the growth going on? And what's the size of the economy there?
Thank you. So obviously, if we have investors on the event, I would tell them that financial services is a hot sector because I want them to invest in the biggest stock. But I believe there's a lot of excitement around manufacturing. Even ourselves, on our balance sheet, we've been financing a couple of large manufacturers, cement, agro-processing. I think there's a lot of excitement there as well. But overall, I think building material, because we are a country, a region in transformation, where everything is being built, the roads, the homes, everything. So I believe manufacturing is a very exciting sector. In the region, labor costs are still quite reasonable. We now have more and more talent. And when you think of other inputs like power, it's becoming more and more affordable, but also reliable. So I believe we'll have a boom in that sector in the next coming years, which is, I think, good for transformation and for the economic growth.
All right. Maybe you could give us how the future of BK Group looks like. If you're to paint for the investors who are interested in investing in your institution, like what would you tell them the future would look like when they're investing in BK Group now?
Fundamentally, I'm a value investor. I would not buy a stock that is selling at huge multiples. And I believe when you look at the price points today, BK is quite undervalued. And it's not me saying that. All the research pieces are putting us at 300 in Rwanda francs and beyond. So I believe we offer exciting opportunities. But overall, I really believe in the story of Rwanda as a country. When you look at the growth trajectory in the past, it's a very young country, stability, very good governance. And the basic infrastructure has been laid out. I think the government has been quite intentional at building the basic infrastructure. So now it's really the time for the business communities to take advantage of all this infrastructure that is built and the very good business environment. So we believe we'll see many companies from the region expanding into Rwanda and maybe even targeting Eastern Congo in particular, because it's a big market that needs pretty much everything. And these are business opportunities for us. So when you think at banking penetration in Rwanda is still below 40%. So this is a market that is open, is ripe for us, especially that we are building our digital capabilities. Same with insurance, we are below 2% penetration. The growth potential there is immense. And we need to be able to design the right products that are tailor-made for our people. I think my colleagues in insurance always say that as much as you don't need to sell banking products because people need not just wake up one morning and think that they need insurance. So yeah, I think there's a lot of potential to design the right products and to have the right distribution capabilities. Investment banking, we have a nascent capital markets with a couple of listed equities. We have a number of companies that needs to diversify the capital base. Most of them still rely only on lending from commercial banks. But now I think BK Capital has shown that people can raise funding from the capital markets. They recently issued an energy bond that was oversubscribed even. So people are now understanding that there are other ways to raise capital. So I really believe we have so many opportunities for the group, and we're expanding into other businesses like life insurance. And we have the distribution capability. We have the people. It's extremely important. We have the right people. With the right attitude, right knowledge. And we have an environment that really facilitates us to do business. So for all the investors that would be on the call, if you don't buy BK now, you'll just regret. In a few months or years, you'll be left out.
That's a good one. I wanted to also find out what's your leadership style, because you talked about getting the right people and giving them tasks. And of course, you don't do things, but you get things done by having the right people around you. Would you maybe describe a little bit how your leadership style? How do you look at managing people? How do you challenge them to grow? And how do you make sure that you don't become a legacy institution that everyone wants to disrupt at the end of the day? So you're on the cutting edge of business.
So it's difficult for me to tell you or to tell people what my leadership style is. I think it would be better to ask my colleagues. I want to think of myself of someone who is collaborative. I don't take, sometimes I have to, but I don't take always top-down decisions. I want to discuss. I want to convince people that it's the right thing to do. And I want people to own whatever they're doing. So I don't need to come all the time and ask them if this is done, and to check on quality, etc. So yeah, it's really difficult for me to tell you how I am as a leader, but I really like to focus on the future, on strategy. And something that I like a lot also is to interact with stakeholders, because I get very inspired when I talk to many people who are not necessarily in the bank. I get a lot of inspiration from talking to shareholders and clients. So yeah, this is the kind of leader I am. I don't know if there are people on the call who can say more, but usually I don't like talk about my leadership style because I'm not sure.
I understand. We're coming to almost the end of our talk today, so I want to come back to the personal a little bit, and maybe you can tell us about some points of advice that you have for someone starting out, maybe thinking of moving to Rwanda or starting off in their career today, some things you wish you had known at the beginning of your journey, and maybe you can share to them career advice and something that can inspire them. Perhaps also the ladies in the audience who want to also be CEOs like you. What can you share from your knowledge and experience to challenge them to also be like you?
Interesting and difficult at the same time. So yeah, I think it's important to have passion because it's like fuel. If you come to work every day and if you want to do meaningful stuff, you really have to put your heart into it. It cannot just be a 9-to-5 job where you just check boxes and go home. I think you really have to put your heart into everything you do. And it gets seen by people who work with you because they see the commitment, they see the willingness to grow and to learn. And eventually, I think things will just follow. So for me, it's important to put meaning in everything you do. And this is the only way for you to have some meaningful impact. So that's what I would say. In the past years, I've been thinking that in my next life, I'll probably study IT. And I wish I had done more of computer science and programming when I was at school. Because when I talk to all these people around me, around concept that I don't understand, I have to always Google and understand what I mean. I really feel it's quite important to have basic digital skills, not just being able to go on your phone and download some apps. I think it's important to have some basic digital skills for the future because I believe the future is digital. So to the young people, I'll tell them, be sure to put some time into programming, computer science, because this is where the world is going. And yeah, put passion into everything you do. I think that's what I would say to end this event.
Thank you so much for joining us today. Definitely, it's been a pleasure. It's our first time also hosting someone from outside Kenya, at least as a CEO level. So very, very appreciative of that. So we hope to host you again when you release your Q3 results, and then you can also share with us. Maybe you could bring your CFO to explain to us a little bit more. So thank you for joining us today. Maybe you can give us your parting shots if you have any today.
Not much, just to thank you, Eric. It's the first Twitter Spaces for me, and it was actually an enjoyable experience. And I look forward to more engagement and discussions and to learning also a lot from the Kenyan market, because I believe it is one big market, the East African region, and it's important for us to interact with peers and with investors in the region. So thank you very much to everyone for listening, and wish you a happy Friday and weekend.
All right. Thank you, and see you next week, all of you. So we say bye at this point. Go ahead.
Bye-bye.